Welcome back to the Iraqi Dinar Today latest news dinar, and thank you for joining us for what is rapidly shaping up to be one of the most compelling and potentially defining moments in the long-running narrative of the Iraqi dinar. If you are tuning in at this specific time, you are in a front row seat for a discussion that centers on a development that could fundamentally reorient the trajectory of this national currency, an event tied directly to the outlook for the year 2025. This breaking news suggests an official redefinition of the dinar's future, moving the entire conversation from the edges of speculation to the center of tangible, verifiable economic reality. The significance of this shift cannot be overstated, and it demands our full, concentrated attention as we delve into the details that have just come to light. For so long, the journey for those following the dinar has been characterized by a complex mix of hopeful anticipation and the continuous need to sift through unverified whispers and inconclusive market rumors. It's an experience built on holding an asset through years of uncertainty, patiently awaiting a decisive signal. That waiting game, according to the latest reports, appears to be drawing to a close, replaced by a development that carries the weight of official acknowledgement. We are now tasked with the critical work of dissecting what this reported announcement truly signifies, how it is poised to impact both local and international financial markets, and what the immediate consequences of this official positioning might be for the currency's valuation and circulation. The gravity of the details suggests a serious movement in Iraq's economic policy, making this the precise time for all interested parties to engage with the facts soberly and thoroughly. The community that has followed the Iraqi dinar, a community often sustained purely by the what-if scenarios and persistent, hopeful speculation, is now facing a distinct turning point. This moment appears to signal a break from that long history, potentially marking the shift from pure conjecture to structured implementation. It is a psychological watershed for countless individuals who have maintained immense patience through cycles of skepticism and economic fatigue, always clinging to the belief that the government of Iraq and its central bank would one day provide undeniable clarity on the currency's true worth. The latest reports suggest that such clarity has arrived, centered on the discussion of a new and officially confirmed exchange rate. This fundamentally moves the entire dialogue from the theoretical realm of aspiration into the concrete domain of established fiscal policy. For everyone observing this unfolding story, this transition represents a significant change, moving from a passive state of indefinite waiting and constant questioning to an empowered state of being armed with what appears to be formal, official information regarding the currency's valuation. This development has the potential to drastically alter the emotional landscape for those long interested in the dinar, primarily because the presence of clear, government-backed policy is the primary driver of market confidence. In the global financial arena, confidence acts as the most essential form of currency, far outweighing any simple number. Therefore, we must confront the fundamental question of why a confirmed official rate holds such profound importance in the larger economic framework. A national currency is not a magical entity. It is a meticulous construction rooted in collective trust, backed by consistently applied and rigorous economic policies. When a central bank or the corresponding governmental body formally confirms a currency's exchange rate, particularly in the wake of substantial political and structural events, it serves as an unequivocal signal to the world. It broadcasts a readiness to underpin that currency with a solid foundation of policy structure and institutional support that can be trusted by foreign entities. Consequently, this announcement transcends the mere reporting of a numerical value on a balance sheet. It is, at its core, a declaration of intent, a powerful signal suggesting that major financial institutions and the broader global markets must now prepare to realign their operating models to accommodate this new fiscal reality. On a practical level, the news implies the possibility of significantly increased liquidity flowing through the Iraqi markets. It suggests the establishment of a smoother, more regulated exchange ecosystem and anticipates a greater degree of participation from major economic players, both domestically within Iraq and internationally across global trade partners. For dedicated followers of the Dinar story, this may feel like a long-held commitment to patience is finally being structurally recognized by the controlling economic powers. For those who are observing the situation with an objective, neutral eye, this serves as a fascinating real-world lesson in macroeconomics. It illustrates vividly how major political outcomes, fundamental changes in leadership, and significant geopolitical events can instantaneously shift the financial and economic ground underneath a nation. This is precisely why the reported confirmation holds a relevance that extends far beyond individual or speculative interests. It functions as a powerful, nonverbal signal of potentially profound macroeconomic transformation, actively underway in the Middle East region, indicating a move towards deeper integration and stability within the global financial infrastructure. The ripple effects of this policy decision will be watched closely by analysts worldwide. We must now transition our focus to the practical implications of this reported shift, specifically examining what the initial movements might look like as they begin to manifest within the commercial banking sector. A primary consequence of an official rate confirmation is that major banks and recognized exchange houses may soon be required to commence the complex process of adjusting their published rates to accurately reflect this new official value. This means that for individuals conducting exchanges or trades within the legally sanctioned jurisdictions, the numbers displayed on trading boards and screens could start changing to align with the new, established monetary policy. Furthermore, this change suggests that market liquidity could begin to rise, meaning a greater quantity of legitimate dinars may be made available for international trade, a factor that naturally tends to stimulate greater international interest and demand for the currency. For those engaged in trading within the formal, legal currency markets, this confirmed rate could translate into increased trading volume and a potentially more predictable and favorable set of conditions for conducting commerce. For those who currently hold the currency, this moment might signify the long-awaited opening of a meaningful window of opportunity, providing a crucial chance to evaluate their holdings under significantly more stable and clearly defined economic conditions. It transforms the speculative calculus from a distant, wishful maybe someday into a more immediate and concrete maybe soon, creating a firmer basis for economic decision-making. The official confirmation, therefore, sets the stage not for a continuation of vague speculation, but for the beginning of measurable, actionable economic movement, and in the world of global finance, tangible action is the primary precursor to realized change. However, it is critically important to maintain a grounded and realistic perspective. This is highly unlikely to be a scenario where currency values experience an immediate, explosive overnight surge. Currency adjustments of this magnitude are almost never instantaneous or dramatic, typically unfolding in measured, gradual phases over a period of time. It is entirely plausible and indeed normal to anticipate periods of initial market volatility, where the new official rates are tested, absorbed, and gradually recalibrated by the global and domestic banking systems. Therefore, while the potential for significant structural change is clearly present, this news should not be misconstrued as a guarantee of a sudden, meteoric rise in valuation. It should rather be viewed as the formal initiation of a complex, phased, and structured economic process that requires careful oversight. Astute market observers and those genuinely interested in the regional economics will now focus their attention with laser-like precision on bank operational behavior, the activity levels within exchange markets, and the shifts in liquidity flows. They will be looking closely at how the domestic markets inside Iraq respond to the official policy change, and how the corresponding global markets react to the news. The virtue of patience, which proved essential for those who remained interested through the long years of relative silence and inactivity, will remain absolutely critical during this inevitable transition phase. This development represents a gradual, tectonic economic shift, not a sudden windfall. The most prudent course of action for anyone watching is to observe the market's response diligently, seek a comprehensive understanding of the underlying policy changes, and only consider strategic actions when the market conditions logically support such a move based on verifiable data. Furthermore, we must take a moment to consider the fundamental political context that provides the backdrop for this announcement, and why it has materialized at this specific juncture. The recent political landscape, particularly the administration led by Prime Minister Sudani, appears to have fostered a new phase of national leadership accompanied by a clear, determined mandate for serious and far-reaching economic reform. Historically, periods of strong governance and political stability often serve as the necessary precursors for significant national policy changes, including those directly related to a nation's currency valuation. The timing suggests that Iraqi authorities may be deliberately leveraging this renewed sense of political clarity and stability to actively strengthen the economy and project renewed confidence in the national currency to the international community. This move could be interpreted as a foundational component of a far broader program of monetary and fiscal reforms, all strategically aimed at reinvigorating Iraq's core economic infrastructure, deliberately rebuilding trust among both domestic and international financial stakeholders, and actively encouraging greater foreign direct investment. If this interpretation proves accurate, then the reported rate confirmation is likely just the initial strategic move within a longer, more intricate sequence of interrelated financial policies. Monitoring the comprehensive political and economic developments closely over the upcoming weeks and months will be absolutely vital for anyone seeking to understand the full magnitude and potential scope of this structural change. The interconnected nature of policy and currency value means the true story lies in the follow-through. For those dedicated followers of this story who have remained long-term believers in Iraq's eventual economic recovery, this development undoubtedly carries the powerful feeling of validation. It may feel like the defining moment they have steadfastly awaited, after years of hearing vague assurances like soon, or we are actively working on it. Seeing something tangible and concrete can be an immensely powerful emotional experience, but it is crucial to remember that this concrete step does not instantaneously guarantee personal wealth. This is why a disciplined and strategic mindset is more important now than ever before. While the confirmation validates patience, it simultaneously introduces a critical period where only careful, measured observation and meticulous strategic thinking should dictate any actions. The temptation for some to act with haste, to make rash decisions without securing a full understanding of the unfolding market environment, could introduce unnecessary and significant risks. For seasoned market watchers, however, this moment could present a unique opportunity to thoughtfully evaluate their options, taking into account all relevant details, including commercial bank policies, actual exchange rates, potential conversion fees, and adherence to international financial regulations. For newer individuals who are just now joining the conversation, this development serves as a live, real-world educational experience in how macro markets, government policy, and national currency valuation intersect and function in the practical realm of global finance. If you are new or have been curious but uncertain, Now is the ideal time to focus intently on the complex mechanics of international finance. The confirmation has an impact that goes far beyond simply affecting the seasoned followers. It recalibrates the entire playing field for every single individual and institution involved. Close observation of how commercial banks and foreign exchange houses respond, vigilant monitoring of shifts in market liquidity, and careful analysis of the international markets could provide invaluable early insights into whether this change is establishing itself as a stable, long-term adjustment or if it represents merely a temporary wave of market volatility. Use this critical time to educate yourself on how currency markets react to distinct political triggers, consequential changes in national leadership, and formal, verifiable official confirmations. The reaction of institutions tells a truer story than market noise. It remains absolutely vital to operate with the understanding that a currency's enduring value is built upon pillars of confidence, regulatory transparency, and sound economic fundamentals, not upon speculative rumors propagated across the Internet. Whether your interest is small or you are following the story strictly for educational purposes, this moment provides a rare chance to observe real-time currency mechanics in action. The appropriate approach to this news must be one of grounded caution, but simultaneously, a state of heightened alertness is necessary, as this is essentially a live, unfolding lesson in the application of macroeconomics playing out before our collective eyes. The broader context of global financial perception must also be a part of our detailed analysis. When any nation officially and decisively reaffirms the foundational value of its national currency, it sends a clear and immediate signal that is registered by international investors, major global banks, and powerful financial institutions around the world. This registration, in turn, has the potential to generate increased foreign interest, stimulate cross-border exchanges, and potentially result in greater liquidity flowing into the country from overseas markets. For the Iraqi dinar specifically, this kind of official acknowledgement could unlock economic doors that have remained uncertain or entirely closed due to persistent internal instability. International financial institutions may now feel compelled to reassess the perceived risk profile associated with engaging in Iraq, and foreign investors might begin to actively explore opportunities for participation in the nation's recovering economy. The potential for growth in remittance flows and overall exchange volumes could drive greater intrinsic demand for the dinar, gradually elevating its visibility and building greater international trust well beyond Iraq's immediate borders. While it is paramount to stress that this does not constitute a guarantee of a massive surge in value, it unquestionably raises the probability that the dinar will evolve into a more actively traded and recognized unit in the global arena. This shift toward broader recognition is a fundamentally positive sign for anyone who has been tracking the currency's path toward renewed viability. However, as is the case with virtually all news concerning financial and currency matters, a core element of inherent risk remains. Currencies possess a certain fragility. Their stability is fundamentally reliant on sustained public trust, continued political stability, and robust economic fundamentals that can consistently sustain their value. A confirmed rate provides an essential initial momentum, but the true, enduring test lies in the consistent policy execution that follows this announcement. The future trajectory is heavily dependent on the government's ability to maintain policy consistency, commit to ongoing, structural economic reform, enforce sound and ethical banking practices, and achieve widespread global acceptance of the new official rate. Should any of these crucial factors fail to materialize or falter, the current momentum could risk stalling or even reversing direction. This is why the announcement must be perceived as the opening chapter of a new economic book, rather than the conclusion of the long-running story. For all individuals closely following this development, it is absolutely vital to remain continually informed, strive for a thorough understanding of all local and international developments, and consistently maintain a long-term perspective. The immediate excitement must not be allowed to override sound judgment, leading to impulsive or ill-considered decisions. Prudence and reason must be the guiding forces, not promotional hyperbole. This confirmed rate should be treated as a significant step forward in a long economic journey, not the final destination. Let us now envision the tangible structure of a successful and deliberate transition as it might unfold over the forthcoming months. If the subsequent phases of the plan proceed as intended, the domestic banking sector could begin posting updated and stable exchange rates that accurately reflect the new official valuation. We might then see recognized exchange houses actively preparing for an increased volume of conversions, with transfer processes becoming noticeably more transparent and effectively regulated. Crucially, foreign financial institutions might start showing concrete, tangible interest in the Iraqi market through new trade agreements or investments. With the accumulation of sufficient positive momentum, we could witness a gradual but steady increase in demand and the development of a much more active and dynamic dinar market. Overall, investor confidence is likely to grow slowly, bolstered by clearer and more reliable paths to liquidity. Over a sustained period, this structural progress could transform the perception of the dinar from primarily a speculative asset to a national currency with renewed and credible viability. Conversely, there will inevitably be a significant degree of measured, cautious realism among many professional observers. Some will understandably choose to wait to see how domestic and international commercial banks practically implement the changes before accepting the shift as a permanent fixture. Others will likely hold back until there is clear, undeniable proof of increased liquidity, a measurable rise in genuine exchange activity, and a visible trend toward broader international acceptance of the new rate. This caution should not be viewed as a negative sentiment. In fact, this measured approach is often the wisest path in complex financial situations. Close observation of how the initial weeks and months unfold will provide a clearer, more definitive indication of the ultimate stability of the new rate. If, for example, high volatility unexpectedly surfaces, or if exchange rates begin to fluctuate wildly in the unofficial market, those early signals will carry immense weight for future decision-making. For the truly long-term observers, continued measured patience may very well yield the best results, whereas for shorter-term traders, while quick moves may be tempting, they are also inherently fraught with a higher degree of risk. This specific moment demands a unique blend of mindfulness, focused attention, and a clear, pragmatic understanding of how to effectively balance a newly emerging opportunity with a necessary, disciplined prudence. We must also pivot our focus to examine the profound domestic implications of this announcement for the ordinary citizens residing within Iraq. A confirmed and consistently stable dinar rate could introduce a much-needed layer of predictability and reliability to the daily financial transactions of Iraqi citizens, directly impacting imports, exports, and the process of remittances. If the major banks and official exchange services diligently align their operations with the new policy, the people of Iraq could experience greater fairness and equity in the exchange rates they receive for their wages and currency transfers. Local businesses would gain the clarity necessary to recalculate their operating budgets with far greater certainty, and the pricing of essential imports and national exports could become more reliably managed and forecastable. Inflation, a constant shadow often cast by currency instability, could potentially be managed more effectively with a persistent and consistent national currency value established over time. Such stability could significantly bolster internal trust in the country's core financial institutions, actively encourage broader local investment, and provide a strong, stabilizing effect on all domestic markets. This is not mere hopeful speculation. It represents the real potential impact that materializes when national currency stability is successfully aligned with robust economic policy and consistently applied sound practices. However, it is essential to remember that achieving and maintaining stability is never an automatic process. For these significant domestic benefits to materialize and become sustained, several complex operational elements must successfully align. Banks must actively cooperate in the transition, exchange houses must operate with complete transparency and adherence to new rules, and financial regulations must be consistently and forcefully enforced, with governmental oversight remaining steady and unwavering. If any of these fundamental components falter, for example, if inflation unexpectedly spikes, or if political instability were to suddenly resurface, the positive momentum generated by this confirmation could quickly lose its intended impact. This is precisely why the segment of the population concerned with broader national well-being, the regular citizens, the local businesses, and the communities, must also watch this period with extreme care. The value of the national currency touches every aspect of daily life, from the prices of groceries to rental costs and the true purchasing power of wages. If the entire financial system successfully reshapes itself, a wide cross-section of the population stands to benefit significantly. However, if the transition is managed poorly, a pervasive uncertainty will inevitably remain. The path immediately ahead is as much a complex social and economic undertaking as it is a purely financial one. For international observers and the global diaspora communities, this pivotal moment may also represent the opportunity to forge a renewed, stronger bridge between Iraq and the established global financial ecosystem. Cross-border remittances, international transfers, and foreign business engagement all rely fundamentally on the assurance of currency stability. A confirmed, stable dinar rate could genuinely encourage overseas Iraqis to send financial support home with greater, measurable confidence, potentially providing a much-needed boost to local economies. Foreign businesses might now actively reevaluate opportunities for direct investment, and international trade partners could, over time, reassess and potentially lower the perceived risk associated with bilateral trade. This potential contribution to structurally rebuilding economic ties could materially improve trade flows and stabilize Iraq's complex financial relations with the wider global markets. This offers the possibility of generating long-term benefits that extend far beyond simple speculative currency trading, resulting in tangible positive outcomes for real people, real communities, and real operating businesses. But once again, the successful timing and flawless execution of the underlying policy are absolutely critical. If this official confirmation ultimately proves to be merely symbolic, lacking substantial, structural follow-through in implementation, it risks becoming just another inconsequential moment in a long history of economic developments. The fundamental difference between a purely symbolic gesture and a truly structural, lasting change lies squarely in the consistency of policy implementation, the reliability of supporting financial institutions, the integrity of regulation, and, most importantly, the rebuilding and sustaining of public trust. Therefore, whether you are a currency holder, a curious observer, a potential trader, or simply someone interested in global affairs, your task is to watch vigilantly, ask pointed questions, diligently follow official bank announcements, monitor exchange rate trends, and track global interest. Use this pivotal moment as the informed starting point for a period of careful observation, not as an assumed finish line. The critical developments unfolding over the next several months will definitively reveal whether this announcement constitutes a true, lasting economic milestone or is merely transient market noise. Now, as someone deeply interested in this ongoing story, what specific, actionable steps should you consider taking next? First, you must commit to staying informed by strictly following official government announcements, published bank rates, and transparent exchange house updates. You should meticulously compare posted rates and vigilantly watch for changes in liquidity. Observe whether exchanges are executed smoothly, stably, and transparently, and deliberately filter out unverified rumors by focusing exclusively on clear, official information. Second, reorient your thinking toward long-term structural potential rather than the lure of quick, immediate gains, as currency markets are inherently volatile and massive short-term leaps are exceptionally rare. Third, approach this entire development with grounded, realistic expectations. A confirmed official rate is a necessary starting point, not an immediate guarantee of any specific outcome. Exercise disciplined caution in all your observations and potential considerations. Finally, treat this situation as one component of a much larger economic picture, where the ultimate currency value is complexly intertwined with national politics, sound financial policy, robust banking practices, and dynamic global economics. Remain fully aware, exercise patience, and be ready to adapt to change. If you have been patiently waiting for this moment of clarity and confirmation, today may genuinely feel like a profound validation of your perseverance. But it is essential to reframe validation not as a final conclusion, but as a critical checkpoint in a marathon. What follows this checkpoint depends heavily on the collective choices made by powerful institutions, the government, currency holders, investors, and individual citizens. This is fundamentally a dynamic, evolving story, not a concluded one that can be summed up in a single sentence. Be a part of the informed conversation with your eyes wide open, your mind clear of speculative bias, and your expectations firmly grounded in reality. Watch meticulously how the various global markets genuinely respond. Watch closely how policy is practically shaped and implemented on the ground. And, perhaps most importantly, watch how the all-important element of trust evolves among the various stakeholders. Because what transpires in the immediate future has the power to define the entire next chapter of the Iraqi Dinar story for years to come. For newcomers who may be questioning the legitimacy of this new focus, that is an entirely fair and necessary question, given the history of currency speculation. However, reports suggesting an official confirmation now provide a starting point firmly grounded in verifiable policy reality, rather than just baseless rumor. Think of this moment as the careful opening of a significant door. You are now invited to look inside, and you may eventually choose to step through, but every action must be undertaken carefully, thoughtfully, and with your eyes wide open to the facts. Do not allow yourself to rely on speculative dreams. Rely exclusively on objective data. Do not rush into decisions. Commit to patient observation. Do not assume instant windfalls. Focus on the long-term structural value proposition. This methodical approach is the precise mechanism by which currency trading, banking, and global markets have always functioned. This reported confirmation absolutely changes the tenor of the conversation, but it offers no guarantee of a predetermined outcome. As we collectively look ahead, we can project a range of possible timelines. In the short term, spanning the next few weeks or months, the most likely visible action will involve banks updating their posted rates and exchange offices publishing new numbers, possibly accompanied by small, cautious increases in trading volume. In the midterm, over several months, we might observe increased tangible international interest, leading to a steady growth in overall trading volume. In the long term, extending over a year or more, the hope is that broader, deeper economic reforms will take firm hold, public and international trust will solidify, and the dinar will gradually and organically re-establish both its stability and its recognized stature on the world stage. However, it is also necessary to anticipate that along this path there will inevitably be economic bumps, periods of lingering skepticism, market volatility, and likely delays in some reforms. That is an entirely normal part of any major structural currency adjustment. What remains paramount is for observers to stay alert, remain consistently informed, and be fully ready to adapt their perspectives and strategies based on verifiable facts. This is undeniably a journey that requires endurance, not a quick sprint to a finish line. Whether you have been holding the Iraqi dinar for a decade or are just now hearing about this unfolding situation, this official announcement demands your utmost respect, full attention, and a commitment to careful, objective analysis. This is a moment that calls for no speculative whispers, no blind, emotional leaps of faith, only clear eyes, steady hands, and calm, rational minds. Use this moment as an opportunity to think, to learn, and to critically evaluate the data that emerges. Because true, lasting opportunity rarely arrives without the prerequisites of patience, awareness, and complete readiness. This time, right now, could potentially be one of those significant opportunities, or it could simply be the beginning of an unexpectedly long and challenging road to recovery. Regardless of the final outcome, as viewers and watchers, we all hold the privilege of following the developments as they happen. Stay firmly connected to the channel for continuous, verified updates. Keep diligently checking all official sources and meticulously watch the behavior of commercial banks. Monitor the posted exchange rates, track all global financial signals, and watch for clear, objective signs of increasing liquidity, transparency, and institutional buy-in. Most critically, watch what happens in the practical, day-to-day operations between now and tomorrow, next week, and next month. Because the story of a currency is never solely defined by a single, isolated announcement. It is defined by the consistent, structured action that follows. If you maintain your alertness and discipline, you will be able to see clearly whether this moment ultimately proves to be a historic turning point or merely another fleeting headline. Would you like me to research the latest official statements from the Central Bank of Iraq or the Iraqi Prime Minister's office regarding this reported exchange rate update?